Hey y'all, this is Ryan with TrendLizard.com. I am going to take a look at Tesla for you today, and it is definitely by popular demand. For the first time since I've started doing this, I've had more than one person request the same ticker. In fact, I've had 3 people just over the last 2 days request analysis on Tesla. So Mikkel, Frank, and Trey, this is for you. Thanks for reaching out. Thanks for being members of TrendLizard.com. We're going to take an updated look at Tesla. We've taken a look at this guy a bunch of times, but it's certainly been making some noise recently. So understandably so, people want an update to see what is going on and to see if we're still confident that it's in a larger counter trend move. So we're going to start from the beginning to give it some context, as always. From the start in 2010, had a nice 1, 2, 3, 4, 5 wave move. From there, a very large multi-month, almost multi-year, about 2-year long ABC pullback that retraced a little bit more than 50% of this entire up leg. And since then, we've had an absolute blast off when Tesla really started making some noise and making the news off that 2019 low to the upside. An absolutely huge move from there. So we are very comfortable and confident in calling this a completed 5-wave move and this a larger ABC pullback. If there's any question that anybody has, it is in reference to this up leg here, whether it's over, whether this pullback's over, and what's going on. So we're going to step in and take a look at all those details. So let's go ahead and start doing that. This changes the chart to a linear scale. So every box here is 50 points as opposed to being a percentage move as it is back here. And I just do this as a way to say, look how big the 21 pullback is relative to the up leg that happened off of the 2019 low. Very large, huge move. It gives me confidence in saying that this 5-wave up move completed and that a correction has begun. Now, some people may debate, did that correction complete already and give way to the resumption of the uptrend? That's something else we'll look at. But that's kind of the context and why we're pretty confident saying that the 2021 pullback is actually a correction of the big sharp up move. So we'll go from there. So let's go ahead and take a look at it back on a logarithmic scale. This provides more detail of the nice 5-wave advance off the 2019 low, showing all the fine intra-labelings there of all the up moves there and that 5-wave move. So our contention has been, and still is, as you'll see as we go into the analysis here, is that it is still in the pullback that began back, I think, in late January of 2021, that we had an A wave down, and we've been in a large B wave that has certainly grown over the last couple months, but that it is still due for a C wave down. But hey, let's look at the other possibilities. Let's see if there's different ways to label this move that would actually make more sense. So here's one way. Let's say that it's still in that 5-wave advance. If we step back out here and say it's still in this 5-wave move and that it has not yet completed. What about the possibility that we got a first wave up, a second wave, and we're still in a third wave? This labeling I do not subscribe to. I don't think it's a good fit. For one, again, based on how big the pullback is in 2021, it looks too big to me. It retraced more than 61.8% of the third wave in this labeling here. It just looks too big. I don't think this is a good fit. Okay, so let's try it a different way. What about if the 2019 up leg completed in 2021 and we got an ABC pullback to the downside and the uptrend has resumed? Now, what's wrong with this labeling? Let's go ahead and zoom in and look just more at this action here to show you why I don't think this is the likely outcome. First off, big A wave down, a nice 3-wave B wave, and then we would have a very short truncated C wave. We generally do not expect anything to truncate. Doesn't mean they can't happen. It just makes it a less likely outcome. If this was a low to that counter trend pullback, this would be the resumption of the uptrend here. Now, the issue I have with calling this the resumption of the uptrend is pretty much every single time it sets a high and then pulls back and heads up again, it creates overlap with that previous high. You can see all these black lines here. You have a high, pull back up, and then overlap here. Same thing here with a high, you create overlap with this pullback here, have a high, and then you create a little bit of overlap here right at the end of September. So if we're calling this a trendy move, we're basically saying, okay, it's a series of leading diagonals, whatever the case may be. What it does not look like is clean, trendy movement, and as always, we expect clean, trendy movement to the upside. This does not fit the bill, and again, you have to kind of accept the fact that you had a truncated C wave, very short C wave to complete the pullback. All of this stuff makes it less likely in my view. So again, that's why our expectation is that this is an A wave down, and everything since then has been a B wave. Now, when I was looking at this, it had a familiar feel to it. And with Elliott Wave, our belief is that the pattern in the stock market is fractals. Things happen the same in different places over different time frames, things like that. And this looked real familiar to me, and then it hit me. This looked exactly like something that we went through with the S&P 500. So let's go ahead and look at that real quick. Here's the S&P 500 off the 2018 high. We had a sharp A wave down. We had a three-wave recovery, and then a pullback that neared but did not breach that low. So if we step back, we have that sharp leg down, three-wave recovery, and then a sharp down leg that did not set a new low. So again, very similar to what we have here. After it did that, it turned to the upside again. We considered this a B wave on the S&P 500 with the expectation of a C wave down. Now, it took a long time for that to play out, but ultimately it proved correct. So let's go ahead and step this forward a little bit. That last chart took us to about here. What ultimately ended up happening is the S&P 500 continued higher. In fact, it even set a new high, but ultimately it absolutely tanked in late 2018 as that C wave decline finally did come to pass. And you can see the damage that was created there. It went from about 2950 down to 2350, losing 600 points. So whatever that is, 20% of the value of that entire index was subtracted over the course of about 3 months. So again, looks very similar to what we're seeing here. To me, the implication is we're going to get a C wave down, or that would be the expectation. Now, if we step back to this chart here, in order for this to prove incorrect, this possibility that the counter trend pullback already completed, a move below 720 would create damage to this that would make it very, very difficult to call this a trendy up move. So I think in general, what we're saying here is that a move below 660 is the ultimate indication that this larger C wave down is coming. But I think we can say a move below 720 would be a good enough warning that this is not the start of a new uptrend and that the pullback is coming. That is the expectation. We consider this to be an A wave down. Everything since then a B wave. And if we see any kind of breakdown here, a move below 720 would give us confidence that we're going to get a C wave down. So may not be the popular opinion. I don't know. Don't care. I'm just talking about what the charts show me and trying to find the most probable outcome. It's not easy to sit here and watch a stock go from 550 up to 825 and to not participate or to have doubts, especially for those of you who would like to participate. I understand. And it might continue higher. It might even set a new high above that 2021 high. But ultimately, with the clues that we have right now, the expectation still has to be for a C wave down. You might think, well, why wouldn't we trade this anyway? You can. It's just not going to be predictable. I mean, when we get counter trend moves, they can do just about anything. This B wave could potentially end at any point. It could continue higher. It doesn't take any real clear form, and that's the thing about counter trend moves. They're just not super predictable. That's why I personally don't trade them. But that's the information we have, and that's what we're sticking with. We continue to expect a C wave down with a move below 720 at any point, giving us a pretty good clue that is what's happening. Now, if I'm wrong, it'll stay above 720 at all times and should continue on its merry way. But the clues, again, that we have currently point me towards expecting another C wave down to complete this very large move. And again, just to complete this large correction of this sharp up move before the overall uptrend ultimately resumes, which we do expect. So on a long-term time frame, make no mistake about that, we remain bullish. We just don't think it's happening directly from here. So hope that's helpful, y'all. Ryan from TrendLizard. If y'all aren't members yet, please come sign up. We do this stuff every day. It works. Have a great weekend. We'll talk to you soon.